Gold under pressure again this Wednesday, nearing the 5-year lows we saw earlier in the week. And Peter Hugg, the global trading director for Kitco Metals, says gold's next stop may just be the psychological level of 1,000. Peter, thanks so much for being with us.
You're welcome, Daniela.
Now, Peter, 2 weeks ago, you said a 5% drop in gold was close, and we saw the metal break through that. It is now trading lower, but the question really is, where do you see the metal from here, heading straight to 1,000?
No, I don't. When I called the 5% drop in gold a couple of weeks ago, I fully guessed, and in all fairness, it was a guess, that the Greek situation would resolve itself, if for no other reason than for political reasons, and they would kick the can down the road. So, taking that out of the equation, there was really no other geopolitical issues or financial issues in that time window that would have suggested to me to create any caveats to be bullish the precious metals. And then, this was a perfect storm. You had Greece settle their debt, kick their debt obligation down the road. You had the Iran deal, and you had Yellen come out saying that she's still looking for an interest rate increase sometime in 2015. All of those fundamentally are negative headwinds for the metals. And once we lost the 1165 level on gold, the downside momentum was in place. I'm a little surprised it washed through 1100, but that was a big seller out of China on a very thin market. And we did get a rebound on that back over 1100, and now the market is struggling just under 1100. So my 5% call is slightly off. We're down about 6% from when I made the call.
So, Peter, obviously a lot of analysts have lost hope here for the commodities. In fact, one expert I spoke to referred to gold as a pet rock. Has gold lost its appeal here?
Again, when people ask questions like that, it's always incumbent on me to ask what the motivation is of why you were buying gold in the first place. I certainly think that the economic realities, both in Europe, certainly in China, and I'm not that enamored with the economic recovery in the U.S. You need to have some kind of a safety valve, against deterioration, especially in the stock markets. I mean, if you look at China, it gave back 30% in a week. The U.S. market looks very tenuous here. It's having a lot of difficulty holding on to that $18,000 level. And, you've got global central banks continuing to print money on a massive scale, both in the European zone, the Japanese, the Chinese. And, it would not surprise me at all if the Fed does not move at all on rates until 2016. So, you have a very, very stimulative central bank policy. So, that is conducive to gold going up down the road when inflation kicks in. I think that is an event that's still down the road, but I do not see a clear path from $1,100 or $1,090 where we're at now down to $1,000. I think it'll be a grinding drop, and my target that I suggested 2 years ago was 1,020. And I'm still holding to that target, and at 1,020, I'd be seriously considering being more aggressive on the buy side.
Now, Peter, one expert I spoke to, Bubba Horowitz, said he's optimistic for the metal. He says that the negative factors have already been priced in for gold. What do you make of that?
I agree. But, I think what needs to happen here is you need to get physical offtake, specifically coming out of the Far East market, and that still has not materialized. And, it's still a dollar play. And as long as the dollar holds relatively stable or moves slightly stronger, because I do think the rate increase that is expected from the Fed is in the dollar value rate right now. So, I mean, the dollar approaching maybe 105, in my opinion, would probably be a short-term top until the Fed gets their rate rise, if it comes, out of the way. And then I think that's actually going to be, one of those events where you've sold the rumor and now you buy the fact. As soon as I think the day the Fed raises rates, if they raise rates in 2015, and I'm still not in that camp, but if they do, on that day or the day after is the day I buy gold.
Now, Peter, you mentioned the Far East, but we are seeing bullion demand pick up there. Is that the only saving grace for gold?
Well, there's physical demand coming out of North America now, and that's just normal demand as gold breaks big figure numbers. 1100, under 1100, new buyers come into the market. They haven't seen this price in 5 years. Silver breaking through first 16, then 15, and now approaching the mid 14s. All new levels encourage new offtake. And you're seeing a frenzy of physical buying in the market that's exaggerated because both the Canadian and the U.S. mints just did not expect it. So they weren't the production wasn't set up expecting this type of demand. And so we have a shortage of investment bars in the market. So you're seeing a flurry of activity there and premiums going higher. I wrote a comment on that a couple of days ago, maybe 4 or 5 days ago. Don't chase the premiums. American Eagles are still trading at some $4 to $5 over silver. Absolutely ridiculous premiums. There's other silver products. Example, Royal Canadian Mint 100-ounce silver bars, trading at 80 cents an ounce over silver. So people are just scrambling to buy, some of these smaller silver products at ridiculous premiums. And I'm advising against it. I'm not advising you shouldn't buy silver at these levels, but I think you should be a little bit more circumspect as to what product you buy. And that's really between you and your dealer.
Well, final thoughts. Let's pull up that chart on silver now, Peter. It's really showing resilience in this commodity slump. How do you see it set up?
Well, silver moved, if you look at it in percentage terms if you look at highs, gold went from $1,900 down to where it is right now, just under 1,100. So that's almost about a 50% retracement. But if you look at silver, it got to $50 and, a 50% retracement is 25. It's moved to 14. So silver, as it did on the upside, is outperforming gold on the downside. So the ratio right now at around 65, 66 ounces of silver to an ounce of gold, I think is a realistic ratio given that the world is still fighting deflation and we're still trying to generate growth. So silver's downside potential, again, on a ratio basis relative gold is going to be more subdued. And if we were to come up with a number and say gold is going to go to $1,000, I think that would take silver probably down into about the high 12s, but not much below that.
All right. On that note, Peter, thanks so much for joining us.
You're welcome, Daniela.
And thanks for watching this edition of Kitco's Gold Report. We'll see you tomorrow.